Hello and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Trent. So with me here today is my colleague William, a senior dealer and marketing executive from Phillip Capital. How are you today, William?
Very good, very good. Nice to see you, Trent.
Yeah, great to have you back. So for today's podcast, we'll be discussing on the topic, what's next for surging US dollar and aggressive interest rate hikes. So to all our listeners out there who are currently trading the US dollar index or interested to trade, do not miss out this podcast. Once again, I would like the help of all our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. Okay, so without further ado, let's jump into our topic for today. What's next for surging US dollar and aggressive interest rate hikes? So the mini US dollar index futures, SDX, has been performing badly due to growing recession fear amid interest rate hikes weaken the currency outlook. The impact of the rate hike on USD index futures is yet to be seen, as some argue that the US might not be in a recession yet, as GDP is prone to substantial revisions following the initial estimate. So, William, US dollar index has rebounded strongly last week following the release of the FOMC meeting minutes. What are the main reasons for the strong rebound in the US dollar index?
Okay, the strength of the US dollar index is usually driven by the expectation of upcoming interest rate hike. So US dollar index has been moving on a very steady uptrend since January this year, as the market expect the Fed to raise the interest rate to fight the inflation in March 2022. So usually when they increase the interest rate, it will give incentive to US dollar invested in foreign country to return back to US. This directly, when foreign fund they sell the investment in foreign country and go back to US, usually they will change it into the US dollar. Hence, giving US dollar a spike. Okay. Therefore, if the market expect the Fed to continue to raise the interest rate in an aggressive manner, US dollar index would continue to go higher. Okay, and vice versa. If we see US dollar starting to weaken or starting to turn downtrend, we will know that interest rate hike cycle is probably coming to an end. Okay, so in my own opinion, US dollar index, even if we don't trade it, is a very important for us to monitor it because it's a leading indicator for us to understand which cycle are we in now in the entire interest rate cycle. Are we still on an uptrend for the interest rate cycle? Are we approaching an end, or are we at the end of the tunnel of the entire interest rate hike cycle? So if we don't monitor US dollar index, we probably won't know where are we now. Yeah.
Okay. Yes, those factors and measures certainly have impacted the market. So for our next question, based on your opinion, do you think it will go higher and what could be the driving factor?
Okay, so I will share this in two perspectives. I will start off with technical analysis point of view. Okay, so US dollar index, if you look at the monthly chart, okay, you look at the monthly chart and you zoom out further, US dollar index actually break up its 19 years consolidation in June 2022. Okay, so a 19 years consolidation breakout usually lead to a huge bull, a huge rally, and the next resistance on US dollar index is actually at 120, which is the high in 2002/2003. At the moment, US dollar is only at about 108, 109. So there is about 11 bucks, 11 points to go higher. Okay, so this is from technical point of view. Now come back to fundamental. Okay, so like I shared just now, US dollar, definitely the momentum of the interest rate hike, okay, it depending on the momentum of interest rate hike. So from CME Fed Watch tool, if you want to look at what is the expectation, just go to Google and type in CME Fed Watch tool. Usually that will tell you what is the market expecting, okay. So if you look at that Fed Watch tool, right, it seems like the market is actually expecting the Fed to raise the interest rate for another 0.5 to 0.75. This is not avoidable. Okay, it's definitely coming in the upcoming FOMC in September. So this will definitely contribute to the strength of US dollar index. Okay, so in short, just to give some context, US dollar is made up of 6 baskets of currency. Okay, the first one is the euro dollar. Okay, the euro, no dollar, is the euro. The second is the Japanese yen. The third one is the pound. The fourth is the Canadian dollar. The fifth is the Swedish krona. And the last one will be the Swiss franc. Okay, and euro and yen being the two major components which contribute to more than 50% of the US dollar index. Okay, so recently, if we look at these two currencies, it has been weakened significantly against US dollar, which is also the reason why US dollar index is really strong.
Okay, understand. So let's see how the market will perform in the coming months. Okay, so for next question, the ICE Singapore Mini US Dollar Index Futures is a relatively new futures contract which is offered by the ICE Exchange of Singapore. What are the differences and benefits of this contract as compared to the existing US dollar index futures?
Okay, so first of all, ICE Singapore Mini US Dollar Index is a smaller contract compared to the US Dollar Index futures listed under ICE US. Okay, therefore, it's definitely easier for retailers to trade the mini version due to a more favorable price per tick. So another one is that the mini US dollar index is listed in under ICE Singapore, which means it's easier for investors, for retail investors to assess and participate the strength of the US dollar. If you want to capitalize on the strength of the US dollar, this is a very good product. Okay, as far as I know, I think it's very hard, or I think probably there is no Malaysia broker in Malaysian broker that offer US dollar index listed under the ICE exchange in US. So the one that lists under ICE Singapore is a very good alternative. Yeah.
Yes, certainly the mini US dollar index is an attractive contract for investors to trade. For the next question, what price level should investors look at if they are interested to trade this market?
Okay, so please bear in mind before we talk about what is the attractive price to participate, we need to remember that US dollar index has rallied around 15% since early this year. Okay, which is really significant for a currency. Imagine I tell you Ringgit Malaysia has weakened for 15% this year, or Ringgit Malaysia has strengthened over 15% this year. So when a currency strengthened or weakened against around 15% is very significant. So if you ask me, because it has rallied 15% this year alone, so in the short term, say in the next 1, 2, 3 months, I reckon US dollar index is likely to move in a consolidation manner. Even if it wants to go higher, it needs to go into a consolidation first. Okay, because of that 15% rally this year. So I reckon the consolidation range will be between 100 and 110. Okay, so if traders want to participate and trade the US dollar index, I think traders can really trade in between this consolidation range of 100 and 110 instead of buying and hold for very big wave to hope that US dollar can go really a lot higher or weaken significantly. I think that in the short term is quite unlikely. So yeah, consolidation trade is the way to go like in the next 1 to 3 months.
Yeah, so investors should definitely look at the price level that you have mentioned. So for our last question, what other news or upcoming events that traders should look out for in the coming weeks if they are trading the US dollar index?
Okay, the most important one when you are trading the US dollar index is definitely the interest rate related events, which is the FOMC. Okay, so the upcoming FOMC on the 21st of September is one of the most important because the Fed will announce the interest rate level during that FOMC. Next will be the US CPI announcement as well. Okay, so CPI is usually a benchmark for the Fed to judge the inflation level in the US. So the Fed will use the CPI, which is the inflation level, to determine what interest rate is more suitable for US economy. And the last one is definitely needs to look at the GDP. Okay, if the GDP is shrinking, is slowing down, etc., then probably the Fed will be more considerate, will be more conservative when determining the interest rate level. Okay, so I think these three items will be one of the most key one if you ask me, key events to look at.
Yes, definitely. Investors should look out for the pointers that I've mentioned earlier. So thank you for sharing, and I hope it will help the new investors out there. And to all audience who are interested to trade the new ICE Singapore Mini US Dollar Index Futures, you can now trade it in our Phillip Nova. In addition, there is no market data fee for this contract. So for more details, you can drop us a message on Facebook and our representative will get back to you. And now we have come to an end for today's podcast. If you have any question or any topics you want us to discuss next week, you can message us in the comment box below. Thank you for listening to our podcast and happy trading for the week. Thank you for your time too, William.
Thank you, Trent. See you next time.
See you.